Hey, recording this video to close trade Monday, 17th of August 2015. Hope you had a great day's trading today. So, in today's video, I'm going to respond to a couple of email questions. Usually when I do these, they go down quite well, and to be honest, responding to emails, sometimes the best way to do it is in a video and kind of show you what I'm looking at on my charts in order to give a proper response. So I'll get to that in a couple of minutes. But before doing that, just to say what a picture perfect kind of reversal day. We've got the 1500 tip bar chart here. This is the open of Monday's activity. You can see it's the close on Friday, and this is the pre-open activity on Sunday evening into the open on Monday. So we had a continuation after the pullback to end of trend signal here. We kind of fell off into a downtrend, and then it bottomed beautifully with the trifecta, the three signals. First of all, you've got to look for exhaustion, sell, and bullish divergence to come in to say we've had an exhaustion of selling activity and there's less and less selling activity going on with the bullish divergence. That's signal number one. Number two is a nice pullback to end of trend, showing us that price has completed a trend move and has gone pullback end of trend. So that's number two. And number three is better pro-am, showing us blue professional bars picking up the lows. Then we have a beautiful little entry here. So on that test back down, blue professional down bar holds, we break above the highs of that, break into an uptrend, and there we go. We're kind of off to the races. And then we start to put in pullback to end of trend. So that's a beautiful kind of trifecta move that kind of bottoms the activity, reversal, because it's happening kind of pre the 11 a.m. window, and this is the 11 a.m. window just marked on this chart, and then we race away into an uptrend. So that was today's activity, but I got a question first of all on today's activity from Soren. So let me just read you this question. Soren says, "Hi, today, August 17th, the better momentum indicator has been difficult to use. Look at the ES from 1015 forward. There are several signals of negative divergence, but the price is going up. Even after a few bearish exhaustion alerts, the price has still been going up. Maybe this can be a theme for your next video." Okay, Soren. So this is what Soren is talking about on the 1500 tip bar chart. After we have this end of trend, we reverse, we go the other way. So Soren is talking about these three bearish divergence signals that happen on better momentum. So 1, 2, 3, and he's saying he's looking for a reversal signal to go short after we have those. Now, first thing I'm going to refer to is two rules of thumb, and you can get these on the website. Rule of thumb number 3, reversals happen before 11 a.m. So go and refer to that. So normally if we're going to get a reversal during the day, it's going to happen before 11 a.m. And rule of thumb number 6, which I think is the latest one, I've only got kind of 6, there is a maximum of 2 trend moves per day. So when we look at today's activity, the downtrend here into the open, bottoming before 9 a.m., that is one trend move. The break into the uptrend is trend move 2. So we've had our 2 trend moves, downtrend and uptrend. We're not going to, well, the highest likelihood is that we're not going to get a reversal and then break into a downtrend after that. Since we've had our downtrend, we bottomed, this is a reversal day, we've reversed into an uptrend. When we come to 11 a.m., we have not reversed by that time. The only thing that we've had by this end of trend signal is a little Rambo pattern showing that the amateurs are desperate to go short at that point because their moving averages are rolling over. They think we're going to break into a downtrend. They get wrong-footed. No. We continue into an uptrend because we've had a downtrend and an uptrend. We're not going to, the highest probability is not to have another downtrend. It's going to be a continuation of this downtrend, and all that's going to happen after that is we're going to break to new highs, just push higher and higher during the remainder of the day until we kind of close on the highs. And you can see the amateurs are trying to get short here. There's 2 Rambo patterns underneath there. As soon as we have this pattern again, they're trying to get short at that point. No. 2 trend moves per day. Now, in terms of where these bearish divergence patterns happen, first of all, this one's a good one in terms of it shows some bearish divergence and we kind of fall off from there. But we haven't got the trifecta kind of going on. We've still got to put in pullback to end of trend. We've still got to push out in order to get a trend move kind of over there. Then the second one kind of comes in. So that's a likely place where we might get a reversal, but because we've had a downtrend and we're now broken into an uptrend, chances are that we're not going to do that. So that's a good day trading rule to know. and you can see that the amateurs are trying to get short at these 2 points, thinking we're going to break into a downtrend, and it just doesn't happen. Once the day has decided, which direction it's going to move in, it kind of momentum continues, until we close in that kind of overall direction. And today was a classic reversal day. We reversed before 11 a.m. We broke into an uptrend. You're not going to be, that's not a high probability trade to go short after these patterns, because all we're going to do is just push up higher and higher, run stops all the day, and we kind of close on the highs. So that's why these two signals are not going to work out in terms of getting a trend move. The signal to take is this one, is the bullish divergence after pullback to end of trend with the blue professional bars, with the exhaustion sell, and then list this little perfect little blue professional down bar. As soon as we come up above the highs of that, break into an uptrend, bang, you're in an uptrend scenario, and that's what you need to be playing for the rest of the day. So, Soren, hopefully that helps. It's kind of a classics, like don't be looking for reversals, just go with momentum. I know it's the hardest thing to do. Next question, and this is going back a few days because Eli sent me a chart on the 13,500 tip bar chart. Eli says, can you explain to me the difference in your indicators between the first 2 hours and arrow number 3? All these three seem to be and indicate the end of a trend. How would you know from you and your indicators that the trend would go up on the third arrow, while in the first two the trend went down? So let me show you the chart that Eli is referring to. So this is the 13,500 tip bar chart, and this is going back quite a few days. This is back into July 21st. Now, Eli on his chart marked these three end of trend signals. So the first one is here, second one is here, and the third one is here. And he says, now at these end of trends we did not reverse. It wasn't until the third end of trend signal that we actually had a reversal, and we broke into an uptrend kind of at that point there. Why was this one a good one, but these two ones not a good ones? Okay, so the first thing to note is we need a trifecta. We need better momentum, having exhaustion, sell, and bullish divergence. We then need pullback to end of trend, and we need blue professional bars. So let's talk about this first signal here. The first signal is we've got our exhaustion sell happening at this point here. If you look at that exhaustion sell at that point, that's getting the move going. That's breaking through this critical kind of support after we topped out with all these blue professional bars at these highs up at 2120s. We broke into a downtrend. That exhaustion sell is showing the selling volume that's kind of getting this move going. So that's the first thing to say. The second thing to say on this reversal, if you look at where these blue professional bars were happening pre that pullback to end of trend, the only blue professional bars that we had here, they were happening on the retrace. They were happening on the way up. They weren't picking it up on the way down. When we went to these lows, there's no blue professional down bars happening here, here, or here. So that first pullback to end of trend does not, for me, have a good condition in terms of exhaustion sell and bullish divergence. The other thing to note is the bullish divergence right on the zero line. So if that happens, I always say wait for a flush signal. Something deeper is going to happen after that. That's kind of a weak signal. We're going to push down into another kind of signal here if that one is showing us the end of a trend. So that first exhaustion signal is getting the move going. Therefore, that kind of negates a pullback to end of trend. All that pullback to end of trend tells us is that all the energy, that downside energy, temporarily kind of stopped. The trendy activity has kind of come to a close. We'll go through a consolidation phase, which is what we did. We kind of bounced backwards and forwards until we break into the second kind of downtrend. Now, the second downtrend, we have a really big exhaustion sell signal here. And that's kind of more like it happening on a left shoulder there. We've got exhaustion sell, and in this case we've got blue professional down bars, come back again, more blue professional down bars at that point. So potentially they are kind of professionals are coming in at those lows, and then the bullish divergence signal kind of comes in. But when we come to the end of trend, we don't even think about it at that point. I mean, the signal kind of goes off, but immediately we just drop through it, and then you can see the blue professional bars are selling this move down. So I suppose that was a likelihood. I always look at pullback to end of trend signals thinking, have we got a trifecta going on? Yep, we have exhaustion and bullish divergence. They're super deep readings. So we've still got to do quite a lot of work in terms of getting back to close to balance and close to zero. Yes, we have blue professional down bars and we have pullback to end of trend, but I always look at that as a signal for saying, well, maybe that's going to hold. The next thing I want to see is starting to see resistance lines kind of broken to the upside, and that will show me that we've really kind of broken into an uptrend at that point. So if you're getting in on that second pullback to end of trend, you're taking a little bit of risk kind of getting in early, but it didn't work out. And sometimes the moves don't work out and we have to lurch down to a next level down where the professionals will step in. Now the difference between this one here is all of a sudden we got bullish divergence. We put in our exhaustion patterns and flush patterns and so on left shoulders. We have blue professional bars here. We have a whole bunch of blue professional bars kind of down here, and the selling that we've got is a lot less than what we were having at this bullish divergence here. So we're more in balance at that point there rather than kind of extreme selling. So we've come down to more balance kind of happening there. We got number 2 pullback to end of trends gone off, and then we got blue professional bars kind of on these left shoulders and down here at the bottoms. So all of a sudden that's looking good, and then this is where we should be looking for entry. I wouldn't get in on the end of trend. I'd be looking for cyclical support to hold after an end of trend, and then maybe get in on the break into an uptrend of that blue professional bar, breaking through resistance, jumping the creek into this uptrend kind of going on here. So that's the difference in my mind between these 3 signals. This one here, that exhaustion sells getting the move going. This one, we had a chance that we were going to stop at that point, kind of wait and see the activity after there, but it's weak all of a sudden. So I'd be waiting for this type of a pattern to test that at those lows to make sure that was holding, and we'd had less selling kind of going on. And then thirdly, this one worked out because we had less selling. We tested, and then that was the move where we kind of bounced from there. So I don't know. That's the kind of pros and cons of a discretionary signal. It takes you to kind of interpret the signals as we're going on. And so with day trading, intraday, I find it helpful to have some rules of thumb to stop me getting into low probability trades. And with this one, it was that second, we're going to have a third trend move during the day. The probability in day trading is that is not the case. We'll just have 2, so that kind of gets you out of that move. And then with this activity here, there was a chance that was going to hold, but we needed more evidence. We needed to bounce off a support after an end of trend in order to be sure that the trend move was kind of in, and we didn't. We just kind of broke straight the way through it. So thank you to Soren and Eli for those questions, and I hope that kind of video response was helpful to you both.